It's Sam again with NATP, and I am joined today by someone very exciting, our newest addition to the team. I have with me Rhonda, who is NATP's new Director of Tax Content and Government Relations. Today we're actually going to be talking about something pretty timely, employee Social Security tax deferral. So can you give us a little bit of a synopsis of what happened and what this means?
Sure. Well, basically on August 12th, President Trump's order directed the Secretary of the Treasury to defer the withholding, deposit, and payment of the employee's share of Social Security tax for a deferment period, which would be September 1st through December 31st of 2020. The order also directed the issuance of guidance, long-awaited guidance, as to how to implement the order. Finally, on August 28th, the IRS issued Notice 2020-65, which offered the official guidance as to the implementation of the order, including employee eligibility, the repayment period, and the employer's responsibilities. Well, the long-awaited guidance, unfortunately, leaves tax professionals with more questions than answers, which ultimately results in the inability to answer their clients' many questions. Some of the top questions that we're seeing that are unanswered is, can an employer choose to participate in the deferral program? Is that optional, which we feel that is voluntary? Along with that, if an employer does choose to participate in the deferral program, can an employee opt out of the deferral? And how would that work? Also, how will the employer collect the deferred taxes from the employees regarding their payroll? And if an employee chooses to leave the employer during this deferral period, how does the employer recoup the taxes? So those seem to be some of the three top questions that we're seeing regarding this deferral program. Okay, well, while the program provides taxpayers who participate a 6.2% increase in their wages during this deferral period, once the deferral period is up and the payback is the beginning of next year, not only are they going to have to pay back the 6.2%, but they're going to have to pay back double that amount to cover the deferral plus the current payroll withholdings. Well, the deferred taxes must be paid back starting January 1st through April 30th of 2021. If they're not, interest, penalties, and additional tax will begin to accrue May 1st of 2021. And currently, as it reads, the obligation is that of the employer to pay back the deferred taxes. Well, I think it is a decision that people should not take lightly, especially employers, because it is an extreme financial liability should the employees decide to leave or other unanswered questions, with this deferral program. So while it does seem like a very positive thing for the employees, it can be very detrimental to an employer.
That's really
so I would just say be very cautious.
Yeah, that's really good to know. Well, thanks so much for your time, Rhonda, and for your knowledge of this topic. It was really nice talking with you, and I'm sure we will talk again soon.
Thank you, Sam.
All right, thanks. Bye-bye, everyone.
Bye.